Hello everybody, it's Matt from Avexa Trade. It is the 26th of September. It's Saturday morning, markets are closed. I'm just going to run through a chart or how I look at charts to do my analysis for the week just gone and the week coming, just trying to keep it really simple. So obviously the last couple of weeks had a decent sell-off, or last week specifically, we had a decent sell-off in the markets. We've been looking for possible signs of reversal. Some of the items which I look at when I first start is just saying, very, very quickly, is price below moving averages or is it above? Obviously, you can see we were clearly downtrend because we had, every time we hit the moving averages, it then sold off. You see that? So black is the 200. So once we crashed through, every time it came back up to the 200, we had a big sell there, couldn't get back up here, bang, bang, bang. So you always use those moving averages to see where the trend is. Also, very, very simply, say with your eyes, you can see it's moving down, but you can kind of cut through the middle like that, and that gives you like a mean or a median of where the price is going. Very, very simple, but just to let you know, so we're clearly a downtrend. Okay, so what you want to do in the downtrend is obviously look for sell levels using the moving averages. This is hourly one chart. It's quite powerful. So as the price crashes through, each time it comes back up, you look to sell, come down. We're looking for a 5-wave move and then 3-wave bounce. So again, if I put just on here, we can count this down, and then this is where you look for, where there's a high chance of some bounces coming in. So we're just using those moving averages and then literally just counting the waves down. We can see it fairly clearly here. So a 1, 2, a 3, a 4, and then a 5. Okay. Now, depending on how you want to label that, that could be a big 1 down or an AB. See as we move on. Whenever you get this, you're then looking for a 3-wave bounce, so almost a correction, which we'll label A for the first leg up, a B for the second leg up, or second leg down to correct the A, and then the C, excuse me, for the final one up. Okay, so once you've got that, you've got that point. So at this point, you think, right, for the invalidation, it would be beyond that level. So you could literally just mark up and say, right, I've got a 5-wave structure, then a 3-wave. So what we're looking for is another 5 down. So when we got that first one, comes back down to that median line, back up to the moving averages, you sell that. So this is a sell. So you sell, not the first one, you don't chase that because then obviously it bounces up. So you sell that next level using the moving averages and a stop loss above there. So you can use your Fibonacci's as well, use 78.6, 61.8, and then we can count down. So then we've got a wave 3. Now when moves end, okay, so 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. I'll just label that up. So again, moving averages are the resistance. And put that. This is a question mark for 5, but we can see 5-wave moves. With Elliott wave, when moves end, okay, you get this divergence, and we keep going on about the divergence. So price is making a lower low. So you see that price comes lower, but we will see some divergence there. And also in our RSI Osmo box, we will see this. Normally RSI and the Osmo track closely. So when you get this move here, okay, you're looking, once you get to the 3rd wave, you're looking and saying, right, the next time price drops below, if I've got divergence, I'm looking at potential entry. Okay, so the question now is whether that was the low. Okay, but it gave us the entry here. Okay, so when we had that next touch there, we've got the divergence, it's come down. We have this bounce here, and then this, a 1 up and then a 3 down. So we've got really low risk or high probability, low risk trade. You want to buy here as low as you possibly can. If I put that to the previous point, as long as it doesn't breach that if I move that over the 0.5, okay, then you've got a really strong chance of at least the equal leg here. So price there was 26, let's just call it 26,500 to 27,100, 600 pip move. So once you've got that bounce, as long as that holds, you're looking at least an equal leg. Okay, so the equal leg there is at least 600. This actually came 26.5 to 27.2. So you've actually got a 700 pip, and you've got the move there 600. So you've got a 1,300 pip move in 2 days. So if you think about that, £2 a pip, £2,600, and your risk is very, very small. Because we're looking at the reversal signs here. Okay, so what we're looking at now is 5.5 should be the low. Obviously things can happen, but in theory this could be a low. Okay, they might trick us, obviously, because we're looking at now at least a retrace of this move, so we could be looking at easily 1,000 pip move up. So if we are using 0.5 as our low, we're going to have a look for a target. So what I do, the first thing I do is from 0.5 to up and then back down to the low. Okay, so this second low is almost like a slingshot. Comes down and we're looking for the 261. Also go to my tools, I go to Fibonacci, I look at expansion. Same tactic, so we go up, put the second point on the 0, and then obviously the 161 could potentially make a double top. So that's target 1, total profit 1. Shape, go into there, put a little rectangle in or whatever shape you want, and then draw between the two. So what we can say here, okay, is we're either going to have a new move up, and if it goes beyond here, we're going up, way up here, okay, but it's all dependent on here. So 0.5, the whole move now, it gives us, this is the target, okay, as long as this level holds, that is the target. So what we need to do is watch really, really closely, pay real close attention for the risk reward and to get there. You'll see now, which hasn't happened, so this is a key observation. Look at the moving averages. Price is now, it's shot up Friday. Price is now above all moving averages other than the 200. So what we can say is that we've got, if I draw again 161 and 161, this is going to tie in with 200. Okay, excuse me. So we might see some resistance in these levels. So this is going to be really key how price behaves between 27,436 and 27,525. There's lots of reasons, people could say it's going to sell here. There's a bit of a gap potentially along here. So again, looking at supports, resistance, gaps. If I draw a box across here and I see several points here, 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 there's several points. So there's a really good reason or good probability that this area could stall. Okay, if that happens, you might see something like this. Okay, pullback. Now, when you get that pullback, the question then is, again, you're looking for risk reward, whether it comes there. Okay, and whether it does fall away, come back down, and then go. So that's what we're looking at on the day. That's just using your tools to find the end of the move and potential low risk, high probability areas. So again, when you're coming down, you're looking for a 5, a 3, and a 5 to end the move. Then you're looking for the divergence, and that kind of gives you a good signal. Other tools, like, again, this is a probability game. Other tools I can use is obviously joining the channel tops, okay, and then saying, look, again, it's funny how all these things happen, how they all kind of link together. We could also start looking and say, it depends where you want to draw that. You could start adding some additional trend lines in here, but obviously we're potentially bottomed, okay, and then looking for a decent move up, at least 3 wave move up. So we want to pay close attention to 0.5 because that's arguably the end. This formation here, there's a potential for it to be a falling wedge. If I have a look here, and again, you can play around with this yourself. This is what I do when I'm looking at areas. Say, right, well, that would be the falling wedge if you follow this red line, this line. But again, we've kind of broken above, so maybe it'll come back down, back test, and then go. But just using these tools, you don't need to use many others. Simple Elliott wave count. We've got the divergence, and then we'll see where we go. So you need to know as a trader your entries and your exits, and because this is a probability game, to get from 76% traders losing money to us making 85-95% successful trades, you can see how people get caught up in these moves where it just crashes through. So what I suspect here happened last week is it was bouncing up, and then people say, right, I'm looking to get in. You can make a head and shoulders pattern here. So you've got left shoulder is A, head is C, right shoulder is 2. So you can imagine people looking at this. A lot of retail traders probably say, oh, it's going to bounce. Every time it's hit there, it's bounced. So and what happens is actually they get in, you know, here, this is a little trick. So when people look for tricks, you know, bounce, 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 this little level, people come in at this level, because it's a retrace of this move, and they think it's then going to go up. And what happens is drops it through, people panic, you know, maybe add to their losing positions, and then it just keeps going. Then it starts coming, and people think, oh yeah, good, I'm going to hold it. You know, the low is in at this point, despite there being no signal. So again, there is no divergence. If you know RSI is making a lower low, there is no signal. Don't do it. It's because people just lose money. This is a region a lot of retailers lose money. Then they feel really heartache because it bounces up, and then like, oh, if only I'd held it, you know. And then it comes back down again. So you look for that clear 5-wave count move. 3 should always be the strongest. You know, there's potential for 1 and 5 to be stronger, but then you've got clearly like an A, B, and a C there. Okay. Then it comes down, and this is the key level. This is the high probability, lower risk area, because that could be a wave 1 there, wave 2 down, and wave 2 can literally, if I just move that fib back down to there, it can go almost all the way to the bottom. A wave 2 is valid as long as it doesn't go past the start. So people will say 61.8, but it can go much further. So what happens is if I show you 61.8, just flip this around a second. So that is wave 1, wave 2 down here. So 61.8 is there, 26,747. This is where a lot of retailers are taught to get in. And then but it can go all the way down, you know, as long as it doesn't breach this point. So when you see the 5-wave move, mark a horizontal line on it and say, my stop loss needs to be literally 5 pips below that. You know, 10 pips, just take into account any spread or the margin that they've got there. It can come right all the way down. So if a lot of retailers got in at 26,747 and it actually dropped to 26,547, so 200 pips, you know, that's a lot of people probably lost their stop loss, and then market goes up. So hopefully this video helps just to say how we're approaching the week, what we're looking for, and analyzing what happened last week. So, and again, avoiding the chop. So again, you don't want to get suckered into some of these areas. They're a recipe for disaster. It might be tempting. You know, I will show you why people would think it's a good idea. So again, price comes up, comes back here. Okay. Now, if you look at that RSI, you say, oh, the RSI is really low. You know, in a lot of the textbooks or videos, they'll teach you know 70 and 30 for RSI. So you say, well, wow, RSI got down to sort of 12, 13. That's a clear buy signal. And obviously with the previous supports we discussed, it could come down here and then it just drops and you think, wow, well, why has that happened? That's why. Again here, you know, looking price RSI making a move up there, people get suckered in and then it drops. So again, you don't enter unless you've got that divergence. The move will not end, okay, until you've got that divergence. Number 1 rule, if you're going to do anything this weekend, just look at it. It will save you money. It will stop you losing money. And trust me, we've all been there. We've watched it and think the market's going to go up now, and it falls away. The end of a moving Elliott wave will not happen until you have that divergence. We've not complicated it. It's not too many indicators. That's just another signal, that divergence. You know, it doesn't give you the immediate entry because then you look for your Fibonacci and your retracement levels. Before it then goes up. Once that low is in, you then know 0.5, that is what I'm trading against. You want your stop loss just below 0.5. Price comes up, okay, comes right back down, and then you look for extension. So as long as 0.5 holds, we are looking at 27,400 to 27,500. When hopefully, you know, it stalls there, moves up. If it moves up higher, 28,000. So really decent moves to play. But again, trading is about managing your risk, your emotions. This takes all emotions out. You're saying, right, that's all I need. And yeah, you can go and make some money. So hope you enjoyed the video and it helps you. Please obviously subscribe to YouTube, like, comment, share. Obviously go to www.invexa.co.uk, sign up to the pack, £299 one-off fee. You get all the training tools, you get access to our WhatsApp group, one-on-one mentoring, and obviously the online the course that we're doing. So, and there'll be lots of exciting news coming out soon. So stay tuned. Watch this video a couple of times if you need to, just to ensure you get that understanding. And yeah, hopefully you have a great week, and speak to you soon.